So traders, right now, I want to encourage you to be open-minded to both possibilities which could form over the next few months. Are we about to see this is the top forming? And if so, I'm going to share with you the pattern that's probably going to form at the top right now. Or is this just a short-term freak out on the downside before we make a massive rally to the upside and we end up in the 6.5 and 7,000 by the end of this year? Is it a big boom or big bust that's coming right now? And I want to share this with you here because I was talking with my actual coaching clients today and I was walking them through them about that. Oh, if you actually like to learn my actual trading strategy, because when I trade the markets, I use a trading strategy, right? So if you like to learn that, I'm running a webinar today, guys. First thing in the description, I'm going to teach you all the details to my trading strategy so you can actually start to utilize it today. First thing in the description there. So the whole thing about the markets right now and what's happening with these markets, it's so important to be, right now, it's so important to not be so, maybe the word dogmatic, right? Maybe they were dogmatic on one direction, because the market can do probably the opposite to what you think is going to do. Now, if you've been around the market, say less than 5 years, I would say that you're probably really confused about these markets right now. And if you are trying to trade these markets or based off what the headlines are saying today, you're always behind the curve. Because remember, a headline is reporting what has happened, not what's going to happen. What has happened is already in the markets. It's already baked in the cake. And as you know, most people are wrong with these markets, and most people lose money in the markets. And so therefore, this is where when you start to get a sentiment read, the small percent of population, and there's a small percent of you guys here right now understand exactly what I'm talking about here, that have maybe the experience, but then also the understandings that a way this financial market works is that most people who lose money in the markets, they go with what they think and feel because of the headlines happening right there. And remember, a headline, and this is where if you're trying to trace based off, oh, yesterday there was a bad number, that the unemployment number or the inflate or the, remember, the market is smart. The market already bakes that into there, right? And so if you're trying to trade on today's news, one, the market already understands that. And two, the market is always forward thinking in the markets, okay? So I'm trying to give you a bit of a broad statement here right now. And one of the things I was actually talking about with my actual coaching clients today, if you'd like to become a coaching client of mine, guys, go to GetJohns, Johns, getjohnshelp.com. That's an application form. If you'd like to get more help this year, guys, if you've been struggling this year, I'm having a phenomenal year this year. I'm in a position right now, and it's just, I'm having a phenomenal year this year. It's been really, really, really good so far. And if you do need some help, guys, then just go to getjohnshelp.com and fill out the application form. And you and I will personally have a chat on the phone, and we'll go from there. One of the things I was actually talking about with my coaching clients was back with COVID here. And I want to explain something here to you from a mindset perspective of how these markets work and why most people who get involved with these markets, they struggle to understand this. But if I can understand this concept of what we're going through here, is when things seem to be at its worst, that's when the stock market becomes its best. And when things seem to be at its best, that's when that market becomes its worst. It's a really weird dynamic, right? When it's at its worst, the best is now going to come. Let me explain what I mean here. Something I was talking about with my actual coaching clients, and I'm going to get to the actual then the markets here, okay? But the one thing that I was talking about with my coaching clients is this. We all know the whole COVID situation, right? The whole COVID crash. We see it on the charts here. Okay, cool. Now, let's have a look at this here. Remember I said before, when things seem to be at its worst, oh my goodness, they did what was the worst part of the COVID situation? What was it? It was what? The lockdowns, right? It's like that was the worst part. Like, I'm not going to get to that side of the coin, but if you have a look at from an economic point of view, right? The worst part was what? Right? It was when things got really, really bad, they had to what? They had to lock down the economy. Now, from a mindset point of view, and if you're trying to apply that thinking, if you say, oh my goodness, Trump's national emergency, they're locking down not only the country, but they're locking down the world, would you think, A, that is now really bad and the stock market's going to crash? Remember, when it's at its worst, the best is now going to come. Or would you think, B, the best is going to come? So what would you say, right? When looking obviously at the COVID crash here, we know what happened afterwards. But what would you say? Would you say, A, oh my goodness, they could lock down the country. Would you say, A, now the market is going to completely crash and fall to pieces? Or would you say, B, this is really bad for the economy. This seems really bad. People are freaking out. There's so much fear in the marketplace. The stock market's probably going to have a big, massive rally out of this. Now, as you can see, the B situation, right? The B side of things, of big rally to come because it's so bad, it just doesn't compute with your brain, right? Most people don't get this when they trade the markets. And this is one of the reasons the psychology of these markets is when it seems to be at its worst, right? Even just recently, right? The last couple of days, what have we seen? Extreme fear, people selling their portfolios, people freaking out, people saying this is 1987 again, this is 1929 again. I saw one person say, my portfolio's down to 80%, sell now, get out now. I wonder what's coming. Now, back to the whole COVID situation. Let me explain something here. And the reason why I'm bringing up this situation here, because I'm trying to get you guys thinking about these markets in a right way. That way you can just make much smarter decisions. Because our thinking, especially mine, I've been trading for 20 years now. My thinking in these markets was wrong. My thinking in these markets was wrong. Because I was always thinking, okay, an example. Trump just national emergency lockdown, world lockdown. I'm trying to put logic to like, oh my goodness, they just did this. That's going to crash the markets. But what ended up happening to the markets? Again, we can go back through history to see when there's these maximum, especially fear, because we're talking about that situation right now, and why I believe there's a massive rally coming out of the markets, at least for the next couple of weeks. What actually happened? When did the lockdowns actually start to form? It was around about here. That's when the lockdowns happened. What actually happened after the lockdowns? An initial shock. Oh my goodness, this is so bad. And we went down for a few days. Now this is a daily chart. But as you can see, when it became its worst, when your logic brain simply says, this is so bad right now, the market's going to crash, then you go trade off that. That's why you're always on the back foot, because you're thinking and you're not understanding the game of the markets, which is the psychology of everyone is seem to be doing this. And my thinking says, and they're trying to use logic of this just happened, so therefore this is going to happen to the stock market. And as we know, that was the bottom for a massive rally to come for over many years. And at that particular time, I was actually talking with my coaching client today, and one of my coaching clients was with me back then, and he knows I took advantage of that. It was this, and then also I took on the stock market, and then also I took a trade on Apple. You can see back here as well too, right? So when this COVID crash here happened on Apple here, I took advantage when this big circle down here. Again, I know I'm going back in time, but I was talking with my coaching clients. I took advantage of some call options through here, and I wrote it up, and I made like 300% return or something like that on this one here over the course of a few month period. But as you can see, right, this is where I'm trying to sort of help you and coach you guys down the path of understanding where we're at right now. And if we can just step back and just learn the lessons from the, and this is what we need to do, right? We just need to go back in time through these markets. Like, okay, how do these markets really work? Right? And again, when things seem to be at its worst, that's when it's actually now probably going to become its best on a stock market level. Remember, the stock market is not the economy, right? and I'm trying to share with you examples through here, right? Like if we actually go back through 2008, right? So if I bring up the S&P 500 and we go back to 2008 through here. Now, this wasn't exact, but this is a weekly bar here, right? These are weekly charts here. Okay? So look at this here. Do you know this period here, right there, those 2-3 weeks, those 2 weeks on the big drop there, that's when the whole Lehman Brothers thing happened, right? The collapse of Lehman Brothers. Oh my goodness, this is so bad, so bad, so bad. Right? That's it. The whole world's coming to pieces, right? A bank that's been around 100 years is going to collapse. Okay. It seems so bad, right? Now, again, the only reason I'm doing this, guys, because I've lived through all this, and now I can connect the dots. Well, I've started slowly connecting the dots a lot more in the last 10 years, because I've been doing it for 20 years now. Trading for 20 years. But especially the last 10 years, especially the last 5 years, I've started to connect the dots a lot more. And I can take advantage of these situations like I am right now. And I'm really, really, really happy with my trading account. Especially, I've taken advantage of some really good opportunities right now. And the reason why I'm bringing this up here, because look what actually happened. When we had this level here, people think that's the big bang, right? Oh my goodness. And we all know the whole system almost came to a collapse through there. But look what happened. When that happened, we were actually not that far off of what? Creating a massive, significant bottom. We're about 6 months off. It wasn't the exact time, right? But on this big downhill, when it seemed its worst, that's when we are actually developing a bottom, and we end up developing this move for many, many, many years to come. And as I said before, this here, when things seem to be at its worst, bank for 100 years is collapsing. That's it. The housing market's collapsing. It's all over. And so this is where if we're trading based off our feelings and what we're trying to use as a logic, we're always going to be on the back foot, because we're always going to be chasing our tail. We're waiting for something really bad to happen. Then the news presents it. Then you're trading based off that. But if you do that, it's too late. The market already knows about it. And if it's something really bad and there's a lot of fear around this, the market's probably going to rally, and then that doesn't make sense to the average investor. But this is how the game works. Understand the game and make a fortune from the game, right? Don't shoot me, right? I'm just the messenger. So the reason why I'm bringing this up here, I'm showing you many examples through here, is that if you go back, we'll talk about this again with my coaching clients today. And I was talking with them today, and we're talking about like every major war in history. What happens when there's a major war announced in the markets skyrocket to the upside. Again, that doesn't make sense to the logical and our feelings and our logical brain, right? Our logical brain simply says, oh my goodness, we're going to war. Everything's got to go to custard. And then the stock market, go look at the last major few wars in the last 20 years. You know, I've got some charts here, and you'll see that our logical brain says, oh my goodness, we're going to war. This is so bad. But a few things happen when we go to war. Firstly, we're already in a downward trend. We're already been going down for a while. But secondly, that's not far off the bottom. And so the psychology, understand the psychology of the markets to make a fortune. And I'm trying to help you guys understand the game, because this is where most traders get it wrong. Okay, and they're going based off their feelings and what they think and what they're seeing right now in the markets, instead of every single time in history. And if you actually look at through all this time, if we actually be realistically and honest with ourselves, right, we can actually see there's many times the scare, right? So the few percent of people who are really going to get this here, I'm trying to share with you. Hey, is that the volume? That is the volume on the weekly chart. Anyway, so I'm trying to share with you right now. All right, right now, and as I told you before, and as we walked through before, is that there's a few things here. Obviously, we see consumer sentiment, right, and what's happening there. We talked about this fear and greed index and what it simply means. We're at extreme fear, right, and what that simply means. And I also talked about, like, not only that, but every time we just see this here, right? See the patterns? There's a pattern to this market. And all we can just do is understand the pattern, and then we just utilize the pattern. That's all we're doing here. And what is the pattern? Every time, the pattern is every time we get below this red line, the extreme fear, one, it doesn't stay down here that long, and two, we're probably getting ready for a big rally in the markets, Now, when I say a rally in the markets, what does this is a daily representation, right? So over the course of a few week period, we're probably likely to do what? This is the S&P 500 right now. We're probably likely to do what? We're probably likely to get a big rally out of the markets. Now, revert back to what I said to you at the start. That's what I'm talking about right now, is what's happening right now and then what's likely to come. We're likely to get a big rally because one, we everything I've said in this video here about how there's just so much fear right now in the marketplace. And secondly, two, understanding the markets just don't go straight down. If this is going to be a top, it'll come down, it'll rally up, and then we'll start the what? The downward trend, right? When we go through these bear phases, we don't just go straight down. Please understand that. So with the combination of two things, huge amount of fear right now, and we've had a very big long stretch on the downside, doesn't mean we can't keep going down a little bit more, and we may do that. We may do something like this, but there's a very high probability we're going to get a very strong rally over the next few weeks because of the sentiment, massive amount of fear, extreme fear. One, we understand that if the market's going to go through another bearish phase, that we're going to actually rally first to create the lower highs and start to go down. So you start to put them together. It's actually quite common sense when you start to look at the market from that perspective. People thinking now, if you're going with your thoughts and your feelings, this is 1987 again, get out. Is this 1987 again? Is this really 1987 again? It's 1929, get out. So if you think that, okay, what do we got here? This is me. This is a screenshot that I put together for myself, and I want to share this with you here, okay? So this is obviously all the different markets. So if you think this is 1987 all over again, what happened? This is the screenshot of the actual market. Let me bring that there. All right, this is the screenshot of the market. What actually happened? This is 1987. What happened? We ran down, and then look at this here. We ran down and we actually rallied for about a few weeks. Then we created what? The lower high, and then the big move down. Oh, but John, this is 1929 again. Oh my goodness, 1929 all over. Okay, cool. If that is, look, we got the rally down, and then we spent a week or more coming up to what? Create the lower high, and then we had the big move down. Oh, John, this is 2008 again. Okay, cool. We rally down, we come back up. We rally down, we come back up. What happens? We always create at least a lower high. And I know this sounds really simple, but the market gives us this lower high. How does a lower high form? A lower high is formed, but when the market comes down, we have to rally for a few weeks, aka where we are right now. We're likely to rally for a few weeks, then we can reassess what's happening right now. So if you're saying, and this way, I want you to just look at the facts for what it is so we can just make smart decisions. Because a lot of times we're like, this is 1987 again. Okay, if this is 1987 again, what happened in 1987? Yeah, we got a big drop down, but then we rallied for a few weeks, and then we started to form the top, and then the market came down. The market doesn't just go straight down. Every single time there's major crashes in history. Look at this here. 62, down, rallied for a few weeks, and then big move. 2021 Bitcoin, 1966 crash, down, up, lower high. All major crashes in history. And now you understand why that if you're looking at the facts, what's happening right now? We've rallied down. So if this is going to be the top, we're going to rally up first for a few weeks, then create the lower high, and then come down. That's the if scenarios. Now, here's where it gets really, really cool. That if scenario may not happen, so we can't be biased there. Because what could this also be as well too? This could be this could be now just a big V bottom that rallies up like that real strong. Oh, John, that can't happen. Forget your opinion. Let Mr. Market talk, right? If that happens and then we come back down to our former high low and we do something like this, if this happens over the next few weeks, the next few months, guess what? The bear market is not happening, the top is not in, and we're about to go through one of the most extraordinary moves to the upside. So we need to see what Mr. Market is going to tell us right now. And my whole role through this, and again, guys, if you'd like to learn my trading system, go to johnsfreetraining.com. There should be a link in the description. Or if you'd like to get access to me where I'm coaching you every single week for the rest of the year, where you can actually join a small group, then go to getjohnshelp.com, JOHNS help.com, getjohnshelp.com. That's an application form. And then I will be personally speaking to you on the phone and we can have a good chat. But the big thing I'm trying to share with you here is that we just need to go and flow with the market. And so on a short-term level over the next few weeks, you can see the reason why most people right now, the reason why most people don't do well out of the markets is because they're really tied to their emotions and feelings right now. Where for me personally, I'm tied to what's probably likely to come. I'm already taking advantage of this and I'm already doing really well over the last couple of days. I've been buying into some of these stocks. I'm not going to tell you what stock, but there was one stock over the last, even it was one of the biggest stocks that dropped on the downside. It was down like 15% in one day. That was after it actually had a big drop of 50% on the big downside. Anyway, so there's a lot of money that there's a lot of money here that can be made over the next few weeks just by understanding without. And especially when you start looking at things like options, where the call options are very, very low implied volatility. The volatility is call options are very low, put options are very high, and now guess what happens when the thing starts to turn? You get the point from there. So that's what I wanted to share with you today, guys. I'm trying to give you guys the facts, right? And I know a few percent of you guys will pick this up, and that's what I'm here for. I'm just trying to share with you why our emotions and what we think and why we're trying to apply logic to everything, including the headlines today. Our thinking and our approach is completely wrong, and that is the biggest thing that is stopping you from not only surviving in this crazy volatile time, but taking advantage of it so you can absolutely make a fortune.